Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing the 1 month recap for M1 Finance, the CMA, the cash managed account, and the Roth IRA. We're going to be covering the total equity in both of the portfolios, the dividends that were paid out, what stocks paid out those dividends, where those dividends were reinvested into, and whether the portfolio moved up or down, measuring the total return for the month of October 2018. So if you are brand new to my channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing for future videos. And of course, if you do like this video, give it a thumbs up. If you have any questions at all, leave them in the comment section as you're listening to the video. And I always read all your guys' comments and reply. So let's go ahead and get into it. Here is the cash managed account for September 2018. We had equity of $227.02. Gains of $18.07, earned dividends of $2.28, and a total return of 12.22%. So where are we at now for the month of October? Well, we're total value, equity, $281.55. So we did move up there in equity, roughly 60 bucks, somewhere in that range. Our gains went down from $16 or $18.07 to now $1.57. Our earned dividends remain the same. You can see that our market gains is down 0.71 now. Here we were up $15.79, and our total return went from up 12.22% to now only up 0.99%. So what happened during the month of October? Well, we can take a look here for the month of October. We lost $16.50 of market gains. So that was initially almost all of our market gains that we had made originally. But our earned dividends overall kept us afloat here. You can see that our earned dividends here kept us afloat. We were down in market gains, down 0.71. But because we do have those earned dividends, that did keep us afloat here, market gain-wise, up 0.99%. Now, our portfolio went down 6.6%. But we see here we were up 12.22%. So what gives? Shouldn't our total return, if we were up 12% and we lost 6%, shouldn't we sit right around 5 or 6% return for the total month of October? For the total return of the month? Well, that would be correct. But I've had a lot of activity recently. I had a lot of friends, viewers, subscribers, investors coming to me saying, hey, can I get your referral link for M1 Finance? I've had a lot of investors at work that are kind of getting interested in investing. They've listened to me and another friend discuss our stocks. You know, every single day we're talking about some sort of stock and sharing portfolio ideas. And there have been some coworkers that have came up to us asking us, hey, isn't the stock market almost like gambling? And we've discussed it. We've talked about the benefits of a Roth IRA, the long-term advantages of investing in the S&P 500. You know, we've shown them the overall market returns of, even though the markets may fall during crashes, they recover in 2 or 3 years. If you look at it in the long term, the market goes nowhere but down. So you don't bet against the market. You always bet, if you're going down, you average down the way down, you average on the way up, and overall, your portfolio will continuously move in the positive direction, especially if you have 5, 10, 15, 20 years. You have nowhere but up to go. You have nowhere to go but up. So I've had a lot of activity in the month of October here. We can see that October 1st, we had a $10 referral. October, second week of October, we had another referral. Third week of October, we had another referral. And then recently, M1 Finance said that, hey, we're going to be bumping up our referrals. If you have any friends, family members, viewers, subscribers, friends on Facebook that you refer, you and them will both get $20 added to your portfolio. So M1 Finance, one of the best brokers out there, not only because of the referral, especially not for that, but I have a whole video top right corner, but main basis is they offer a free no fee account. You can make a taxable account, you can make a Roth IRA. I highly suggest everyone start a Roth IRA. Plus, there's no fees associated with either of those, just $100 or $500 depending on what account you want to create. You get free trades 1 time per day, so you got to make it count. It's a long-term investing platform. You get paid out dividends. You can reinvest those dividends for free. You can see here that my $40, I only have one stock in here, the ETF here, VU, but I'll show you on the Roth IRA how it works when I add money in. and you can buy partial shares. So here, with only $40, I bought 0.1613 of a share at $247.91. Now that did average me up. So here, $70 going into the market averaged my portfolio up, putting me instead of a market return of around 5 or 6% for the year, because I averaged in at a higher price than my initial buy price. Back at the beginning of March, I bought the S&P 500 very cheap. I bought it in that 200 and see, I'm not even sure where I bought my VU at. Actually, I think I show it here, 200 by cost. My price that I bought it at, $249.44. So I bought it extremely cheap, where it's at 248 now. So I'm still up. I would be up 5 or 6% there since my buy point. But anyways, that is the cash managed account. Don't want to spend too much time in there. If you guys do have any specific questions, let me know in the comment section below. Otherwise, let's go ahead and jump into the Roth IRA. Now, the Roth IRA here had a total value of $6,510.67. Our total market gain was $176.16. Earned dividends, $136.66. This was a total return of $312.82 for the month of, or for the year of 2018. Yeah, for the total run for 2018. And we had a total return of up 5.52%. Now, where are we at now in October 2018? Let's go ahead and switch over to the Roth IRA. Now, the Roth IRA here, it does show a higher amount of equity. This is because I put in quite a bit of money into the market in October. I like volatility. I know I needed to max out the Roth IRA, and I took advantage of being down in the market to jump and buy and add more money into the market. If you look at my Facebook post, I added about $2,700 into the market. That was between my Roth IRA, that was between the Roth 401k, my work 401k, my wife's account. I didn't really include my wife's account. I include her Roth IRA, but I added, I get paid every 2 weeks at work, so I add 200 and some bucks per paycheck. So over the month of October, I added $600 and some into my Roth 401k, and then on this platform, we added some money as well. So here we can see that our total market gains went from up $176.16 to now down $286.84. Our earned dividends went from $136.66 to now $154.42. And our total return went from being positive 5.52% to now up or down 2.26%. Now during the month of October, we went down roughly 5.83%. We had a total market loss of $462.95. We made $17.76 in just earned dividends during the month of October. So we are down $445 in the month of October. But we're still only down $132 in total equity as far as what we've invested in the market. We've been paying out some dividends. We've actually added quite a bit of money into the market this month. You can see our portfolio still remains half green and half red. I like to have those half reds. Look at these nice Caterpillar, Avery, Stanley, Black & Decker, AbbVie, AT&T, Lockheed Martin, Kimberly-Clark, Digital Realty Trust, and JP Morgan. A lot of these here towards the end, these have been hammered here. Sears, Sears isn't going to be paying back Stanley Black & Decker their $9 million that they've sort of earned. They're kind of dead at that. Caterpillar's been getting hammered by increasing, tariffs, increasing costs in steel. Nobody's wanting to buy at least their equipment. AbbVie, the whole company there sits with that the drug there. I forgot what the name is. AT&T. Their earnings, they sold off after earnings 8 or 9%. Lockheed Martin again getting hit here. Defensive stocks got hit hard on Monday, I believe. There was a big sell-off on defensive stocks. Kimberly-Clark, they had a bit of a sell-off there after earnings as well. JP Morgan, down 3%. It doesn't really matter. That's a great financial. So overall portfolio continue to move up higher. You can see Apple, Pfizer, Cisco, a lot of these strong stocks. It's good to have a mixture of both. Overall, these will balance out eventually. I'll continue to average into these. All of these companies are great looking companies over the long term. So while they're down right now, they're just at a discount, 30% off in the store. If you go look for a pair of headphones that are $100 and they're 30% off, and you're buying more and you're able to get a higher yield on cost, you're able to lower your unit on cost, that's a good advantage there. So what is our activity for the month of October? So you can tell that this is a Roth IRA. So one of the benefits starting your Roth IRA, it's a tax sheltered account. So all of your capital gains, your dividends, your interest that you make inside of this portfolio at 59.5, and as long as you've held the account open for at least 5 years, it is 100% tax free. I'm not sure why that's not loading there. So I do have a video on starting your own Roth IRA. I suggest all my friends and anybody starting an account over on M1 Finance, start a Roth IRA right off the bat. Put $100 into your taxable account, invest in whatever you would like, but get that free $20 if you go through a referral link, and then start your Roth IRA and begin pumping up that money as up to $5,500 per year into your Roth IRA. That is not loading here. I'm going to go ahead and hit that refresh button, see if that triggers it. Oh, it's having me log back in here. I'm going to go ahead and pause the video here. Okay, and we're back. So here, beginning of October, I added some $390.64 plus some dividends here from Lockheed Martin, paying out $2.45. I targeted specifically JP Morgan. I wanted to start it. I didn't have a lot of financials in my portfolio. I wanted to pick up JP Morgan. It's only gone down 3% since I bought it, so I think that's a pretty good bottoming out point. JP Morgan will go. It may continue to fall down even more, but they had a buy-in yield of around 4%. So for every $100 I added into that stock, it's paying me out $4 for every $100. Here, second week of October, I added another $415.33 into the market. I also had Kimberly-Clark pay out $3.51. Here, I decided I wanted to buy AbbVie, add it to my portfolio, get another healthcare pharmaceutical company in there. I believe I had Johnson & Johnson and Pfizer within my portfolio, so $421.29 went towards AbbVie there. It has fallen quite a bit in the recent couple weeks. October 8th, new week, we didn't have any dividends paid out during that month. I believe that was the month that Blackstone normally pays out those dividends, but I have recently removed it. I made a video last week covering, top right corner, I'll have it linked, why I decided to sell off my MLP, which was BX, ticker symbol BX, because the Roth IRA does not tax shelter MLP distributions, those capital gains distributions. You still have to pay taxes on them even if they're within a Roth IRA. So I went over all of that within that video. Check it out. So I deposited $10, my normal standard deposit. I believe this was probably a good week in October that I didn't want to put any new money. I was kind of waiting for it to kind of fall back some more. So $10 here bought me Kimberly-Clark, Stanley Black & Decker, and WP Carey, that REIT, great REIT there. So going into my fifth week of October, a lot of weeks here in October. So here I got paid out $6.53 from WP Carey. That's a pretty good dividend payout. You know, $6.50 is a good payout. I decided here markets are going down in the red. I put in $1,000. I let this just go in. Oh, here is where I sold off my Blackstone group. So I sold off my Blackstone group. This is probably where I did my video covering why I decided to sell it off. And I just put in $1,405 into the market. This is part of my sell-off of Blackstone plus my $1,000 of deposit. So here, $1,400 bought me some Apple, AbbVie, Caterpillar, Cisco, DLR, ESS, Johnson & Johnson, JPM, KMB, Lockheed Martin, Praxair, SPG, Stanley Black & Decker, you know, Walmart, WP Carey. So it loaded me up with a whole bunch of stocks. I had also adjusted my target percentages within my portfolio, my equity percentages to my portfolio. So it just sort of filled it up as it needed. And I added some REITs in there as well during that time. So that was my fourth week in October. And here just recently I added another $330. I covered a video recently coming up with my plan for 2018 to max out the Roth IRA, adding $330 every Monday into the market up until the last week of December 2018, and that should completely max me out for the Roth IRA. So up until the end of December, I'm going to be putting in $330 every single Monday into the market, regardless if it's going up, regardless if it's going down. M1 Finance, it buys the stocks that have the lowest equity to target percentages, so it automatically here targets these stocks that have been beat up: Caterpillar, DLR, ESS, Stanley Black & Decker, AT&T. I bumped it up back in my portfolio because it had taken a hit after earnings. It was sitting at $30 a share, which I think is a great buying opportunity for AT&T. It's a safe, not a whole lot of growth from this company, but it's a very stable, safe company. I decided to add 2 shares of that. They pay out $2 per share, so those two shares there for $60. They're going to be paying me back $4 per year. That's a dividend yield of around 6 point some change, or 7, almost near 7% yield there. So good buying opportunity there. Stanley Black & Decker, I only put in $1.31 there. Probably in the next $330 will probably hit that one as well. But that was all my activity going into the market for the month of October. You can see overall, you know, let's see here, 3, 7, 1,000, so 1,700, 2,000, and then I had some money also go into the cash managed account from referrals and those $10 additional deposits. Plus I had my Roth 401k at work. I'm getting every paycheck, I just put in the 5% of my paycheck, so it's $200 and some into there. Over the month of October, I added about 600 and some change in just my Roth 401k at work. So that is my Roth IRA. Now, what else can we sort of discuss here? We can jump and take a look here at the comparisons. So for the month of October, how did our portfolio do? Well, we lost 5.83% for the month of October. If we take a look here at the S&P 500, its 1 month change is down 7.28%. For the index here, year to date up 1.43%. Here the Dow Jones, 1 month change down 5.76%. Year to date up 1.6%. And the NASDAQ here, 1 month change down 9.10%. Year to date up 5.83%. So overall, my portfolio is still in the negative for the year, but this just gives me a couple more advantages. My portfolio did get hammered here pretty hard. If we sort these from highest to lowest, a couple of these stocks here down towards the bottom, Caterpillar, Stanley Black & Decker, AbbVie, AT&T, they've been hammered recently. I haven't checked into Avery for quite a while, but remember, not too long ago, if you check Altria in my past videos, I was down 20-25% in Altria. I had actually lowered it to a 1%er in my portfolio, meaning that I didn't really want to put in any new money into the stock until it recovered. I had actually considered selling it in my portfolio because, you know, I didn't want to sell it at a loss, but I'm just kind of letting this one recover, and you can see that it went from nearly a 20% loss. I don't know if it shows me here in this video, but it was down nearly 20% at a point in my portfolio, and this has recovered only down 1.42%. So imagine when all of these other ones slowly recover back up to where they're supposed to be, and just with those dividends that they're paying out, that'll be perfectly fine. Over the long term, they're going to be continuously adding to my portfolio, the wealth, the generation of dividends there. So now jumping over to, let's see, I'm going to go ahead and duplicate this one, and this will be my copy of my live data, and I'm just going to go ahead and paste the values only, so nothing should change there going into tomorrow. And this will be my October 18. Okay, so the differences here between September 2018 and October 2018, we can see that the total base investment I added, you know, we were base investment at the beginning of October, $6,213.70 was how much money we had actually contributed towards the Roth IRA. Let me go ahead and zoom this in here for all of those on the mobile devices. I know you guys have a hard time seeing. I have a hard time. I always rewatch all my videos, and I definitely have a hard time seeing these sometimes. So base investment at the beginning of October was $6,213. Base investment now for the end of October, $8,359. Here, our dividends paid to date, $136.66 to now $154.42. That was an increase there of $17.17. So I believe the yield did go down slightly because of the sell-off of BX. BX had such a high yield. Here, if we look at BX, ticker symbol BX, it had a yield of 7%. And it was going to go ex-dividend this month and pay out next month, but I did sell it off this month. I added in a couple stocks there as well. So you can see that my average yield did fall from around 3.45 to now 3.27 currently. But my annual income went from $218.83 to now $281.06. So every year, if I were to no longer invest any more money into the portfolio, the stocks here that I have within this portfolio, the equity in here of $8,359.67 would pay me out $281.06, plus those would reinvest every single week going into the market and buy more shares, and then those shares would pay out more dividends, and it would just compound over and over. So here we can see that there was a whole lot of red here, the 1 month performance. Very little of these stocks actually came out ahead. Altria had a 7.81% gain. We have ESS, this is the A6 Property Trust, this is the multifamily REIT I added to my portfolio. It had a 1 month performance there of 4.13%. Johnson & Johnson in the green here, up 0.23. Here, SPG, another REIT, up 4.4%. You can see that REITs did fairly well. Another REIT here, WPC or WP Carry there, went up 3.69. And Walmart here, Walmart coming back off those lows. That was down 10, 12%, and Walmart is now, it went up during the month of October, 6.21%. And here we can see that overall, my buy and stock performance, Apple still keeping up on top here, 25.92%. Cisco, ESS, Johnson & Johnson, Pfizer, Praxair, Simon Property Group, WP Carey, and Walmart are my green ones here within the portfolio. So our current value is down as far as our original cost, and that's completely fine. That's just going to allow me to average into these portfolios. You're going to see next month that my unit cost is going to continuously go down. So let's see here. What did we buy? We bought a lot of stocks this month. So here, for example, Walmart, I believe, was down in my portfolio. So my buy price for Walmart, $99.44, is now $98.97. So that's a difference there of what, 40 some change. That is because I purchased quite a bit of Walmart in October. I put in those $2,000. That bought a lot of stocks there at a lower price initially than when I had purchased them, because they had lost value, and that allowed my portfolio, my buy price, my unit cost average to go down as I'm buying those shares at a discount. So that is the total return here. So average yield 327, annual income of all these stocks here $281.06. Here's how much they will earn every single month or quarter. So I don't have very many monthly paying ones. Let's see, I don't hold any monthly. So here we can see the pay dates on all of these, and I have a little chart here of how they're kind of spread out. So the only month I don't get paid out, the only week I don't get paid out a dividend is in, I didn't get paid out a dividend this month. So some of these are a little bit wonky sometimes. So let's see, we're in October. So here, Altria should have paid me out a dividend, but I think Kimberly-Clark, and I didn't hold ESS. So ESS will fill my role for the month, or for the week that I was supposed to get paid out a dividend in the month of October, but I didn't receive anything. It was just a referral or a $10 deposit there. And let's see here. So S&P 500, my base investment was $100 going into that taxable account. That's all I wanted to add in there. And as of that point, my new original cost, with the referrals of $10 and $20 going to the account, original cost is $282.28. Current value $281.55. That's a difference of a loss of 0.73. Annual income for this portfolio is $5.47. And we've already kind of covered the dividends. So we've covered the dividends here for the Roth IRA. We had Lockheed Martin, Kimberly-Clark, Altria, WP Carey, and Cisco paying out dividends. So this is showing $19.79. So if we go here and look at activity, and we go back in October 1st, dividend, Lockheed Martin there. We can go ahead and stick this one over here. Okay, so Lockheed Martin paying out first week of October, Second week of October, we had paid out Kimberly Clark, $351. Third week of October, we didn't have any dividends. And then fourth week of October, we got paid out $4.56 from Altria. And then the fifth week of October, or fourth week of October, we got paid out by WP Carey, $6.53. And the last week of October here, we got paid out Cisco, $2.74. So this is showing that I got paid out during the month of October, $19.79. And it's all showing up here in my activity. But again, if we go and look at this portfolio for the month, the dividends, this shows me $17.76. So we've talked about this in the past. The way that they kind of showcase performance and such is a little bit off. So that is basically it. If you guys have any comments, suggestions, we've already covered, setting up our weekly deposits in multiple videos. We went over changing it from $10 to $330 on Monday's video. And that is basically it. So if you guys have any questions at all over M1 Finance, investing in a Roth IRA, investing in a taxable account, your Roth 401ks at work, 401ks at work, let me know in the comment section below. And that is it for this video. If you have any questions at all, leave them in the comment section. And of course, quick disclaimer, I'm not any sort of financial advisor, tax professional of any sorts. These videos are for fun and entertainment. So if you do plan on investing, talk with a tax advisor if that's something you would like to do. But that is it for today's video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.